What's up, guys? Today we're going to be looking at Guidewire Software's earnings. The stock is up 11% after hours trading. After the company had a massive earnings beat, they beat earnings per share by 41 cents and they beat revenue expectations by $7 million. The revenue of $293 million was up 22% year over year and they beat expectations. This was a really good earnings report for this company. But first things first, a quick summary of what they do. They're a platform and PNC insurers trust to engage, innovate, and grow efficiently. We combine digital core, analytics, and AI to deliver our platform as a cloud service. More than 450 insurers, from new ventures to the largest and most complex in the world, run on Guidewire. So that's what they do. They offer AI and they offer software for insurers. But let's look at the numbers, right? Year over year, their revenue grew from April, 3 months ended April 30th, from about $138 million in revenue for subscription and support. And this previous quarter in 2025, they had almost $182 million in subscription and support. So their largest growth in revenue is the subscriptions of the software that they're selling, which was really good. Year over year, you're also looking at an increase in revenue from $240.6 million to about $293.5 million here in 2025. That is absolutely phenomenal growth in revenue, especially the fact that this company was able to turn a profit was really good. Sales and marketing as well only increased about $7.3 million. You can see that highlighted here. That's really good that they were able to increase that revenue so strongly without having to have a huge increase in, let's say, advertising costs to gain those new customers. So it shows that they're probably growing that revenue organically through probably increasing their sales with current customers or maybe acquiring new ones through the proof of their software's abilities to make their customers happy. Their overall diluted earnings per share last year for the same quarter was a 7-cent loss earnings per share. This quarter, they were able to post 54 cents diluted earnings per share, which was absolutely a phenomenal growth in earnings per share. This company is starting to look like it's going to be consistently profitable going forward in the future. And of course, you see with the net income as well, you had about $5.5 million net loss in the previous year in 2024. And for this previous quarter, we had about $46 million in overall net income. So this company is doing very well and growing their overall profitability, which is really strong, especially considering the AI play here. That's their main takeaway. But anyways, assets though, let's look at their balance sheet. Cash overall was reduced by about $37 million, give or take, about $38 million. So a little bit of concern there. Cash did decrease. Their overall assets though, total assets increased from 2.2 billion $226 million in July 31st of 2024. And the total assets for this previous quarter, April 30th, 2025, those assets were at $2.488 billion. So a rough estimate, like $240 million in overall assets. So that's pretty good. I don't like the decrease in cash, but it's not really much of a concern yet because their overall liabilities is not too bad either. Total liabilities is only sitting at about $1.125 billion. So you have almost twice as much in the assets column than you do the overall liabilities. Also, their cash is almost half of their total liabilities that they have as well. So this company looks pretty healthy balance sheet wise. There's not really a huge cause of concern from what I can see here. Their short-term debt accounts payable is only about $29 million as well, which is not really a whole lot to be concerned about. Overall liabilities, not too bad. Lease liabilities, you can see, was at $33 million. It's not too bad. Overall liabilities, I'm not too concerned. That cash decreasing some, though, is a little bit of room concern, but let me know if you have a different thought on this balance sheet. Overall, I would say this company is looking pretty decent. We don't have 12 months of overall profitability to really have a good PE history for this company, but I'm sure we'll get that updated here in the next following days after we factor in this current earnings report. Again, this earnings came out today, so it's so early that we can't really figure a PE based off Seeking Alpha or anything available right now. So let me know in the comments if you thought this video was helpful. I try to provide as much value as I can in these earnings analysis. And if you liked the video, please consider subscribing. Thank you all for watching.